Evening traders. Sorry for being a little bit late. We had a little bit of work overtime today. Had some clients in some Singapore and Malaysia needing a little bit of assistance. The time zone's a little different, yeah. And so to catch them after work, you got to stay back a little bit. Definitely relatively quiet in terms of the market movement yesterday. We saw sideways action in the euro, sideways action in the pound. What was a little bit of movement today in Asia was some heavy selling coming through on the Aussie. Now this Aussie was always in a downtrend, yeah, and then we got this short squeeze on Monday, and then it was interesting, the price action this morning. I thought, oh, okay, maybe there is a bit of support here. Rolled over some, at the start of the Chinese session, you saw a little bit of risk off coming through, and iron ore prices dropping again. And that was enough to send the Aussie lower as it started to fall. The buyers have always been a bit skittish in this pair. And so, now that we've broken 75 going into Europe, likely that we do head lower, and that we are going to test that 74.50. If we can't break that level, we can get less bearish, but the market definitely looks too bearish now. Now, unfortunately, the trade I did yesterday, I chickened out of on the pound Aussie, right? I was along the pound Aussie on the pullback to the support and started to bounce off it, and then this morning, as I saw the Aussie turn, I got out like an hour before the market turned again. I was too soft. Too worried about the market rolling over and starting doing some of this stuff. I just, took a little bit of money, 220, but nothing crazy. Probably should have held it and put stopped entry, or just not being such a pussy. But it's I wasn't exactly at that time. The Aussie was doing this, and I wasn't exactly sure where we're going. So better be safe than sorry, and of course you miss out when you trade emotionally like that. That's an emotional decision rather than a trade decision. Nothing wrong with your stop, original stop underneath 70, support here, just underneath that low. You lose. But this trend is potentially very strong. I was also getting a bit skittish on pound. Pound itself is not topish, but it's there's news out there which could tip it down, right? And so far it's been pretty immune to it. This is UK May and EU talks getting a little bit frisky. Overnight you heard the report that the EU Brexit bill for the UK leaving is going to be about 100 billion, sort of payment to exit. That's a lot of money. 100 billion. That's 100 billion euro, I believe. That's a little bit too much to take seriously. So, I thought maybe there'd be a little bit of residual downside anyway on that. Just, sneaky little check on the support. I didn't get too far though. 129 held again. And so the lows are continuing to get higher here. It's by no means are we out of the woods, but it's hard to be ultra bearish, isn't it, on that price action. But it was another risk, yeah, and those added together with the Aussie showing a bit of strength was enough for me to get out. It was the wrong move in hindsight. Now, the other trades we got going are the long euros. We're expecting Macron to win comfortably. I'd actually want to hold a little bit of US dollar exposure into this FOMC meeting tonight. So the FOMC meeting, right, the odds are 65 to 70% of June. They will be moved by how hawkish or dovish they are at the statement tonight, right? Now, I don't think they're going to come out and be ultra, enough to move it higher. And they might be neutral, but it is a neutral sort of stance. We're patient, we're data dependent. Next move is higher, when rates will be higher soon, normalizing, blah blah blah. Is that enough, right? I mean, if they don't overtly signal to the market that June is on the table and seriously, it's probably happening, then will the numbers go up from 70%? In my opinion, I think it's worth the risk here that if anything that comes across as balanced, right? We're writing the report tomorrow and it's balanced. views on the risks to the economy or something like this, and that the odds drop from 70 to 50, and then the NFP becomes the big thing. In that scenario, then I think euro is going to be, say, at 109.50, 109.60. Not a big move, just a rally. And that's once you get above 109.50, 110 becomes automatic magnet. Why would you sell at 109.60 when you could sell the 110 test? I do have a take profit here at 109.80. I'm not too greedy. There also could be a little bit of pre-French election jitters, and maybe some risk off the table, which, given the market is long euro right now and short term, could lead to some euro selling just later in the week as we get closer. So I'm not going to be mucking around. If we do get close to 110, I'll probably be taking some off the table. And then if there's a strong number on Friday from the NFP and the market dips down, I'll be looking to buy that into the weekend. Okay, so that's my game plan for the euro. I'm looking for opportunities to get long on dips. I'm not too worried about a dip. I think that's just another buying opportunity. And a hawkish case tonight from the Fed probably is only good for 50 pips to the downside anyway. It shouldn't be the market shouldn't get carried away with it. If the odds go to 80% or 85%, I don't think we're going to get that strong signal that it's definitely happening. I think they're going to be still concerned about the fiscal plan of Trump, and the fiscal plan will have an impact on their rate hike decision. Therefore, you should expect them to still be concerned about that. They were concerned about it at the last meeting. I don't think anything's changed in terms of if Trump's tax plan is going to get passed when, his infrastructure plan is going to get passed when. I don't think anything's changed too much to that. But we'll see. We'll see. We're speculating, aren't we? We're speculating on this announcement. But in any case, I'm not too worried about getting caught long on the euro. That's not my biggest fear in the world. I am a little bit worried about the pound. I don't know. I think things are going to get worse, right? I mean, the short squeeze has still got a lot of room to go. It's just they come out of the corners in this boxing match between EU and May are pretty aggressive. They're going after each other. What's the latest little headline I read just before? Something along the UK's May barred from Brexit term talks with EU leaders. Yeah. Well, they're worried about her, huh? She's vowed to be a bloody difficult woman. Okay, Jesus. I sort of like her. Yeah, I sort of like her. I don't think you're going to get a gap on Monday. I think you're just going to get, depending on where we are, right? I mean, if we're above 110, the rally won't be that big. If we're below 110, you might get a test of 110 at the open. Does that make sense, trader? Not a big gap, but a little gap. The big gap already happened. Alright, so let's have a look at some of the technicals out there. We haven't checked the daily technicals for a while. We look the Credit Suisse report every now and again, don't we? So we haven't looked at that, just to check the daily tech so we're not missing something like a 200-day moving average coming straight up. On one of the least watch pairs. Alright, buying the euro at 108, Jesus. Oh god, so would I, mate. Jesus. I mean, there can't be that. Stop on the pound, not that far away, 127.60. That can get stopped. They want to sell the Aussie at 75.60. Jesus, I can't just ask for perfect trades. Looking to buy the Euro 100 points lower at 121.60. Alright, Euro. Yeah, look, it's still in that sort of trend channel. You know, perhaps we are somehow, some way going back lower. Clear that gap. I'm sure that will make all your gap traders happy. Haven't heard about you trading the gap guys for a while. Where have you all gone? Still in those trades. It's getting a bit more dangerous now, right? I'll tell you what. I will review the trade the gap theory if by some magical way that gap is closed. Yeah? I will sit here and I will become open-minded to the whole theory again, and I will review, you know, the different ways to play it and the statistics behind it, and we'll do it on stream, and I'll eat my hat. Yeah, I really don't encourage it. It's straight away you're selling into a really good news, whatever the news is that causes gaps, or bad news which causes gaps. It's really not the thing that I like to be traded, and to use the you know, sort of saying, oh, it might not be in one day, it may be in 5 weeks, but the gap always closes, is, you know, let's see the maths behind it. Let's see how often that happens, and how often does it lead to a 5,000 point, you know, sort of deficit in your account. We will have to get into that. Alright, if that gap closes, I will go back to gap school. Dollar yen, still got a little bit of room to the top side, that 113 level, that downward trend line. We talked about that in previous stream. Can definitely get there. The numbers are decent. You know, yields are trying to rally in the US. You know, you had that government shutdown averted, and you know, risk is on. But that last 20, 30, 40, 50 pips, is that worth getting involved? Not for me. I would love to buy the dip if we get a dip down to 110. Delayed Fed's not that dovish, right? It's just delayed. And if you're trading, you know, dollar Swiss, there's probably an incentive here to be looking to buy. Now, just be very careful here. Dollar Swiss is not its own currency. It is really the inverse of the euro, and there's a lot of ways in which this pair can go down without any reason, right? Without any sort of Swiss-based reason. It's all to do with the euro. If the euro rallies to 115, the dollar Swiss is going to be down at 97 at least. Okay, so keep that in the back of your mind. This is not its own pair anymore. You know, it hasn't been for a long time. But dollar Swiss is the inverse of the euro. If euro goes up 1%, dollar Swiss is going down half to 1%, at least. It's not like Aussie and Kiwi where they might go separate ways for a little bit. No, not really. Not really at all. Yeah, Nick, I know, mate. I believe that too, but I you know, I will review it again if it because I've just sort of seen too many gaps not filled, right? That's my background, and I always thought it was crazy to be counter trend trading on news that was so strong to cause a weekend gap. The issue with selling the Aussie as well, you know, like, it's bearish. It's clear to see it's bearish, but it's so slow. Yeah, and it will respond to a weak Fed number, NFP number. It will rally. So you get yourself stuck short in a pair which is not moving quickly. You might be in there for days. It's just not my cup of tea at the moment. If this pair speeds up, alright, let's put an ATR on it, right? Let's put an ATR on it. If it speeds up, so this is average true range. If it starts to speed up, we will start to trade it. Let's say if the ATR gets above 60, alright? That's so this is 60 pips a day. Right, at the moment it's trading at 49 pips a day, high to low. That's just crazy low volatility. It's not tradable. Let's have a look at how much it was back in the day. Back in the day, holy shit, did the Aussie move. Yeah. And this is the important point, right? This is what we call the speed of the market. And you need to know the speed of the market so you can set your stop losses appropriately. Yeah. A 30-point stop with an ATR of 50 is effectively, you know, with the, say, the pound yen, a stop of 100. Yeah. So we'll go more into depth. We'll start looking at the ATRs of certain pairs so we can look at how we trade our stops. But it's yeah, this is really, really low volatility. Do you want to have a look at the, you know, dollar yen just for comparison? All right, just for comparison, the dollar yen's ATR on the 15-minute is almost the same. All right, it's starting to fall off as well, but it's still 74. All right, so volatility is really dropping off in the markets. Jesus. I mean, you want to see something really crazy? Let's have a look at the Dow's ATR. What do you think the Dow's ATR is going to be currently, guys? Now, cheating if you know that the VIX is all-time lows, so you know it's going to be low. But what do you reckon that shadow is going to look like back in the day? It's not too bad, is it? It's not too bad. Yeah, but these average ranges, you know, this is only 200 days back. We're gonna go back. We've got to go back in time, boys. This is a little bit. All right, this is a little bit deceiving, though. Okay, a 1% move. This is monthly too. What am I doing? What am I doing? So sometimes the average true range can get up to 400. Now, obviously, an 183 pip range in the Dow average, right? It's at 20,000 is different to, you know, 128, 160 down here when it's at 13,000, right? Because now the big numbers are getting bigger. So a 1% move here is 200. A 1% move here is 130. You understand what I'm saying there? So this volatility is still very low. Still very low. Can go a little bit lower. You know, so when we'll look at these ATRs when you know things hit the fan. Next big scandal, next big issue in the market, we'll have a look at it. But at the moment, it's still very low across everything. Aussie is just crazy low. That's the main reason I don't trade it. Credit Suisse put out a report on pound Kiwi. I know a lot of you guys look at it. So pound Kiwi's obviously been rallying ever since the pound started to rally, and the Kiwi's been sold on the back of, you know, Trump's threat against dairy with Canada, and just generally, you know, all the high yield is getting crunched. So we're based out with the pound Kiwi. We're shooting higher. 2 is really achievable. Yeah, that's target's been talked about by a lot of traders, asking me, can we get to 2? Yeah, I mean, there's no reason. That's just nothing. That's a 2-week rally. And it would come from the pound side more likely than not, or a big risk-off event where the a big risk-off event. They're looking to long from 180. Jesus, they really want to pull back. Stop below 178. This is an update? Oh, this is an update. They've already been long since the break here. And they're targeting 192. Still a bit of room there. Alright, we'll sort of have a look here at the daily FX strategy for ING. Just want to see their views on the Fed. So some talk about the balance sheet stuff, right? This is where they start to sell off some of the bonds that they've got. They've got like $4 trillion worth of bonds. I don't think it's way too early for that. Alright, they actually think the market is overpricing. 70% probability of June hike. So do I. I think it's going to drop down to at least 50%. The ADP actually is pretty important, right? ADP will set the poll really for NFP, the field for it. So that's worth watching. That's in 2.5 hours from now. Alright, their team's preference is for September rate hike and more serious about discussion about the balance sheet after the summer. So probably later in the year. There is this debate between Macron and Le Pen. That's taking time. That's about the same time as the Fed tonight. So that's where some volatility will come through. Macron's been good in debates before. It should be fine. Not really what I'm watching. Speculators are positioned relatively flat on the euro. But we think are minded to look for the positives. Yeah, you can feel that. You can feel that. They're looking to buy dips. The price action is definitely constructive for the euro. Many little dips have been finding support. ECB also found support. Alright, so I'll be back for the stream for NFP on Friday. I'll be streaming, and then immediately after you might get to see both Andrew and Jason stream. So all three of us are going to be streaming within the same hour. It's going to be quite a good event if you want to catch up with the latest and sort of see how to position it. I'll give you a bit of a preview though. I'm hoping for a strong NFP and a bit of euro weakness. Skittishness. I want to be getting long into the announcement over the weekend. I think it's going to be fine, and I'm trading though with a guaranteed stop. So if your broker can give you a guaranteed stop, then definitely try that. The broker I work for, Easy Markets, has a guaranteed stop. IG has a guaranteed stop. CMC has a guaranteed stop. You just got to pay extra for it. But that's sort of an event where it's ridiculous not to use it. Costs a pip more. Just get there. And if there is any sort of spike in volatility protection, so when volatility spikes in the option market, it means that a lot of people are buying puts or calls one way. So the demand goes up, so the price goes up. So the only way that happens is volatility is effectively increased. So that whether it's real, it's implied basically, but it's expected volatility increases. That way, usually it leads to euro selling. Yeah, not euro buying. I don't know. I think it depends how this debate goes tonight, I suppose. But I think it's over. But I expect if somehow Le Pen wins, the markets to open down 500, 600 points on the euro at least. Yeah, the my broker does it on MT4. So Easy Markets does it on MT4. Nick is an IB. I'll try and get his link up one day. If you do want to have a dealer like myself, not the cheapest broker, but if you want service, you want someone to speak to, it's a very good old school service broker. Alright. Alright guys, well good luck with your trades tonight. It is going to be quiet until we get to that FOMC and the French debate later in the US session. I'm hoping, looking for some euro strength. If you're not in the euro market, then look for a pullback to get in. Probably a little bit more than you currently have, but nothing wrong with the current level either. And that's, apart from that, there's no really clear trade. If dollar yen dips down substantially, then if the ADP is a bit weak, then it might become good risk reward down towards 111.60, 111.50, but not up here. It's too high. Trade safe, guys. I'll be back on Friday for the big event.